So, you've probably seen the ads, right? You've heard the buzz. Forex trading seems to be one of the hottest topics in India at the moment. But what's the real story? Well, in this explainer, we're going to cut right through all that noise and give you the essential, no-nonsense guide to getting started.
I mean, just think about it for a second. The idea that you could trade the US dollar against, say, the Japanese yen while you're just sitting on your morning commute, all from your phone, that's the power of these modern Forex apps. But, behind that super simple interface, there is a massive, and I mean massive, global market. So let's break down how it all actually works. At its core, Forex trading is actually pretty straightforward. You're basically making a bet on which way a currency's value is going to go. So, for example, if you think the US dollar is about to get stronger against the Indian rupee, you'd buy the dollar and sell the rupee. Your profit, or your loss, comes from how much that exchange rate moves. Simple as that. And just to be super clear, this isn't some small, niche corner of the financial world. Oh no, the Forex market is literally the largest on the entire planet. It absolutely dwarfs the stock market. And get this, it's running 24 hours a day, 5 days a week, jumping across different time zones. It's a truly global and non-stop playing field.
So let's really pull back the curtain on the fundamentals here. We're going to cover the essential rules, the hidden risks you need to know about, and a really clear roadmap for navigating this, complex but pretty exciting world.
Okay, now let's get to what is probably the single most critical thing for anyone trading from India, the legal side of it. Getting this wrong can have some pretty serious consequences, so we're going to be crystal clear on what the rules are.
All right, let's just address the elephant in the room, shall we? Is Forex trading even legal in India? The short answer is yes, but, and this is a big but, the long answer is a little more complicated, and it is absolutely crucial that you understand the details.
This slide really lays it all out perfectly. Think of it like two different roads you can take. Over on the left, you've got the government-approved, totally safe path. This means you're trading through brokers regulated by SEBI, that's the Securities and Exchange Board of India, and you're only trading pairs that involve our Indian rupee. Now, on the right, that's the risky path, the one with unregulated offshore brokers. This is where you'll see those tempting Euro/USD pairs, but it's also where there's zero investor protection and a really high risk of scams.
So, now that we've got the theory down, let's get practical. When you're scrolling through the App Store and you see all these options, how can you actually tell the difference between a legit, safe platform and a really risky one? Let's dive into a few popular examples.
So one app you'll see advertised all over the place is Octa. It's really well known for being super beginner-friendly, and it offers cool features like copy trading, which lets you automatically mirror the trades of more experienced users. Sounds good, right?
And yeah, it's easy to get started with very little money, which is great for beginners. But, and honestly, this is a huge but, it is not regulated by SEBI. For any Indian trader, that means you're operating in a very high-risk zone. It's a deal breaker.
Another huge name you'll come across is Exness. They're famous for their lightning-fast trade execution and the fact you can get your money out instantly. For traders who are jumping in and out of the market all day, those features can be a major draw.
But, as you might be guessing, we're starting to see a pattern here. Despite all those attractive features, Exness is not regulated by SEBI. And that high leverage they're always advertising, well, that's basically borrowed money. It lets you control a huge position with just a small bit of your own cash. It can magnify your profits, sure, but it can also magnify your losses just as fast. It is a very sharp double-edged sword.
Next up, we've got XM. Their big selling point is all about education. They offer tons of free webinars, tutorials, all this stuff that makes it seem absolutely perfect for anyone who really wants to learn the ropes.
And yep, here we go again. Same story. Excellent learning resources, a really friendly interface for beginners, but the bottom line is, it's an offshore broker. Without that SEBI oversight, you are basically on your own if something goes wrong.
So after looking at all these popular but kind of risky options, the obvious question is, what is the actual safe and legal choice for traders right here in India?
Well, the safe and legal path is with established CBI-registered brokers, like Angel One. You probably already know them from the Indian stock market. See, unlike all those offshore apps we just talked about, Angel One operates completely within the Indian regulatory framework.
So if you look at the pros column on this slide, you'll see the key advantages right away. Fully legal in India and, most importantly, regulated by CBI. That means your money is actually protected. Now look over at the cons column.
The trade-off here is that you're limited to trading pairs that involve the Indian rupee, so no trading EUR/USD, but you are trading with total peace of mind.
Okay, so now we know the rules, we know the players. Let's build a practical, step-by-step plan for how you can actually start trading safely.
Think of this roadmap as your key to starting out the right way. First, and I mean first, educate yourself. You have to understand the language, how to read the charts. Second, choose a SEBI-registered broker. I can't stress this enough. Third, use a demo account to practice without risking a single real rupee. Then, when you're ready, start with a small deposit and make small trades. And finally, the most important rule of all, use a stop loss on every single trade to protect yourself.
And when we say small capital, what does that actually mean? Well, for a beginner who's just dipping their toes in, somewhere between 1,000 and 5,000 rupees is a perfect starting point. Just remember the golden rule: only invest what you can truly afford to lose.
All right, to wrap all this up, let's do a quick-fire round of the essential habits you absolutely need to build and the common traps you have got to avoid. These right here, these are the signs of a smart trader. They treat the demo account like their training ground, they respect their money by starting small, they protect every single trade with a stop loss, and they never overcommit. These aren't just tips, folks. They are the building blocks of a long-term, sustainable trading career.
And on the flip side, these are the traps that catch so many beginners. Jumping in without any education, getting tempted by that crazy high leverage, trading without a safety net like a stop loss, and of course listening to all that get-rich-quick hype you see on social media. These are the fast tracks to an empty account.
You know, ultimately, this quote just captures the essential truth of it all. Forex trading is not a lottery ticket. It's a profession. It demands skill, it demands discipline, and it demands continuous learning. So the real question isn't just about whether you want to trade, but are you willing to put in the serious work to become a trader? The choice is yours.